there's been quite a buzz in the business community. Lending rates are finally coming down. The Bank of Ghana policy rate has dropped by 300 basis points in recent months. Inflation is at its lowest in over 3 years, and analysts are cautiously optimistic. But here's a big question: will this relief on paper translate into, real relief for Ghanaian businesses? Because let's be honest, many of you listening to us right now, whether you run a factory in Tema, a fintech startup in East Legon, a cocoa farming in the Western region, you know that access to affordable credit can make or break your growth plans. And cheaper money should, in theory, make it easier for businesses to expand, hire more people, and also to innovate. But in practice, it is not always that straightforward. Commercial banks may not pass on the full benefit quickly. Risk appetite might remain low. And even when the interest rates number looks better, there are a few hurdles here and there, like collateral demands, loan processing, delays, and market uncertainty that can still hold businesses back. And that is why today we are putting this question under the microscope with a distinguished economist, Dr. Felix Larry Esilfi. He is the executive director of IDER, and he's an economist as well. And he's having this conversation with me. Doc, you're welcome to the Business Breakfast on Z.
Thank you, sir. And thank you for having me here this morning.
I hope you're doing well.
I'm doing well by His grace.
Great. Okay, so let's get into our conversation this morning. Of course, let's start with the monetary policy rate. Now, 300 basis points cut by the Bank of Ghana, the biggest in our history, and has been described as something very bold and unexpected by the Bank of Ghana. How significant is this move really in the broader economic context?
Okay, so once again, thank you very much for having me, and a very good morning to our cherished listeners and the viewers on all your social media handles. Yes, so first of all, whenever there is monetary policy, rate changes, be it increase or decrease, there is a reason backing that, and there are some economic indicators that is triggering such a change, be it increase or decrease. If you look at this administration, when they took office, the monetary policy rate was quite higher, and it was not high just because the then administration wanted it to be high. If you recall, certain weak economic activities of the previous administration caused us to have a situation where we call the hyperinflation. And so I think at that time, the inflation somewhere 2022 thereabouts, or early part of 2023, stand to be corrected. Inflation was above 54%. Because of illegal printing of money and some economic policies that were not really good at that time. So to curtail that, and based on the IMF kind of conditionalities, one of the indicators was that the government of Ghana at that time should do everything possible to bring the inflation down.
Right.
And so at that time, the then government, through the Ministry of Finance, thought it wise to, peg the monetary policy rate at a certain point that will help, in curtailing or controlling the inflation trajectory. And so one of the, reasons for for using a monetary policy rate, or a government setting up a monetary policy rate to control economic activities, is also to actually, control inflation. And so that was the target at that time. When this government assumed office, fast forward, they realized that one of the reasons for which inflation was higher was that the government was competing the private sector for loans or for capital. So in economics, we call it crowding out. So government was also on the financial market scavenging for credit in order to finance public, strategic public investment. And the private sector also needs that same credit to be able to do business. And financial institutions are not Father Christmas.
Of course.
The risk associated in giving loan to private sector is higher than the risk of giving loans to government, no matter what government will repay.
Right.
But for credit, for private sector, it's more or less like a bit risky. You know, you could see that non-performing loans in the financial market at that time was also very high. So the financial institutions thought it wise to rather lend it to government, you know, rather than the private sector. As a result of that, there was something called crowding out, and so private sectors were not getting, you know, kind of credit for the businesses that they want to, or for the kind of business investment that they want to embark on.
Right.
Now, when that happened, there was unemployment, and then other economic downturn, you know, indicators. Inflation was soaring high and all of that. So the reason for government to, you know, peg the monetary policy rate at that time was, you know, that. Now, this government, again, fast forward, decided that, well, I'm not going to borrow haphazardly from the financial market. Rather, one of the ways to curtail inflation is to strategically peg the inflation, the monetary policy rate at a particular level, and reduce my borrowing, and then embark on expenditure-based fiscal consolidation.
Yeah.
So if you heard the finance minister, he says, I'm going to cut waste. I'm going to cut waste. When you cut waste, that expenditure-based fiscal consolidation, what it means is that when you cut waste, the monies that would have been wasted are, you know, kept by government to be able to create enough fiscal space to undertake strategic government expenditure. So one of the things that they did was to, you know, go to the treasury market, and then when they actually issue out the bonds, or what happened was that there was oversubscription, but the finance minister, through the government at that time, refused to take the excess. So you could see that there was excess liquidity in the system. The Bank of Ghana then came in to use what is called sterilization technique to curtail the excess liquidity in the system to stabilize the whole thing. And then for us to be able to have a controllable inflation. Now you can see that I think inflation is around 13 point something percent. The last time I checked, I'm sure it has come down.
12.1.
I'm sure it has come down further. So the reason now the Bank of Ghana has, you know, decided that, and even in the second quarter, the Bank of Ghana still maintained the monetary policy rate that is set for the first quarter, just to keep the inflation down. Now that inflation is at a very comfortable, you know, state, 12 point something, we are just past half of the year. We are now in the 8th month. So technically, the year will end in the next 4 months. And we have 12%, you know, 12 point something percent, which means that it's good if whatever policies that the government is putting in place is continued. We may realize the single digit that the Bank of Ghana predicted. Okay. Now that the inflation is also down, and then you will see that our CD has also gained some sort of strength through certain policies. We now have more or less kind of positive trade balance and all of that. You could see that the economy is more or less stabilized. And so for businesses to also have some sort of effect or feeling of the benefit that we have chalked, the Bank of Ghana realized that, okay, let me reduce the monetary policy rate so that capital or cost of capital will be cheaper in the financial market for businesses to take up. And so that is how come the monetary policy rate has been reduced by the government of Ghana, okay, or the Bank of Ghana. Now that this has happened, it is expected that the lending rate, so the monetary policy rate is set by the government through the Bank of Ghana to control, you know, the cost of borrowing, inflation, liquidity, and overall economic activities. The lending rate is the rate at which the banks will charge, you know, for issuing out loans to individuals or, you know, private sector, you know, businesses. And in economics, another term is opportunity cost of capital. So, for example, if the government or if the Bank of Ghana has the monetary policy rate, let's say at 23%, the banks will also, in order to, you know, there is a risk for issuing out loans, we also say that, okay, we are adding, say, 5% to it. So it's going to be like 28% interest rate. That 28% is what is called the lending rate. So whenever monetary policy rate goes down, it is expected by economic, you know, sense that, you know, the cost of capital, or in other words, the lending rate will also come down. And when it happens, like, there are a lot of, you know, benefits that businesses actually enjoy.
we're going to get into it a bit more, but of course, like you mentioned, inflation has dropped significantly. Now we're doing 12.1% in July, and so we see that there's some easing coming there. But does that signal a genuine turning point, or it is too early to celebrate?
We need to, yes, it will be a premature ejaculation to, celebrate because you see, the cost of doing business in this country goes beyond just cost of borrowing.
Right.
There are other, direct and indirect variables that also influence the cost of business. But I think the major one is the cost of borrowing. That is the lending rate. So, yes, the monetary policy rate has gone down. We need to see how the banks are also going to compute their lending rate, that will be used as an interest rate for businesses that borrow. I think it is too early for us to see that. But definitely, the reduction in the monetary policy rate is huge, quite significant, that no matter what, if the system is fair, then we should be able to see it reflecting in the lending rate as well.
In the lending rates, right. So when I had a conversation with Professor Suming at the University of Ghana Business School, and he was saying that it wasn't going to, we're not going to see the changes reflecting in the lending rates anytime soon. I don't know whether you share in the same stance.
Yes, I share with him. Greetings to Prof. He's one of the greatest economists that I most of the times follow. He and Professor Bob King. So greetings to him. I agree. If you recall, just a few seconds, I was saying that the cost of doing business in this country goes beyond the lending rate. Yes. So even though the monetary policy rate has gone down, we're expecting that the lending rate will actually also go down. But the point is that there are other direct and indirect variables that will also influence the cost of doing business. So yes, we will not see that. And even with the transmission effect of the monetary policy rate drop to the lending rate, there are other things that businesses will also consider, because first of all, they have to look at the economic indicators of the economy. Of course, there are some of them that are obvious. We know that they are positive. Again, the business environment, the risk factors, and all of that, they need to consider how businesses are even faring now. You understand? All of them contribute to the risk computation, which will arrive at the margin that banks will also have to add to the monetary policy rate level to get their lending rate to be able to loan. So that's why I said it is a premature ejaculation for us to, you see, the economic structure of this country, we need to be careful. Anytime there is a positive gain, the transmission effect is quite slow. Because the system, institutions that are supposed to regulate. So that is one of the reasons I agree with Prof.
Okay.
Even there are institutional factors. The business environment, is controlled by institutional factors. Regulatory bodies are not doing what they are supposed to do. Individuals are not doing what they are supposed to do. The businesses themselves are also expecting to get, unwarranted profit margins. You understand? And this thing ought to, be regulated by the institutions. And since the institutions in charge of this regulations are not working.
Which institutions are you referring to?
We have the Chambers of Commerce. We have Investment Promotion Council. We have even the Registrar General. We have the GRA. These are the bodies that are supposed to ensure that businesses are doing the right thing in the system. We have Association of Ghana Industries also there. They are more or less like a civil society that advocate for businesses and all of that. But they also have a duty to ensure that their members are doing what is the what is
talk
right.
about TUC and all of those.
TUC, exactly. Then labor unions, trade unions, and other, formal and informal business associations and all of that. All these people, all these entities ought to be regulated. But if the government is behaving like a toothless bulldog, and then they do, that is why the last time when I was here, I said, look, the government can even ensure that the exchange rate in terms of CD to $1 is 1 CD to $1. If regulations are not properly, pursued, we're not going to have the full benefit. Your guess is, you remember when I was here, I think one Saturday morning show, or one of the morning shows, I was saying that, look, even the pricing of commodities at the market, when the dollar to the cedi and all other major currencies, the cedi was showing strength.
Yeah.
You could see that people were still complaining when they go to the market, things are
true.
expensive. But let there be a situation whereby now the dollar gains strength, and let's say it moves from 10 cedis to 15 cedis. You will see that even the previous goods that they imported, they will add all of them.
Right.
And then give a new price to it. So who actually regulates the system to ensure that when it is time for the consumers to benefit, they are ensuring that the businesses are doing the right thing for the consumers to benefit.
Right.
And when businesses are supposed to benefit, they are ensuring that the right consumers also do what is right for businesses to benefit. That symbiotic relationship, somebody ought to supervise that. And
are you in any way calling for price control?
yes, I price control. Look, Ghana is not a free market economy. I keep saying that, look, we are a mixed economy. In the olden days under President Rawlings's regime, we were under centrally planned economy. So if you like, take one of the budget statements read by Honorable Kwame Pepra, they even costed the price of kenke, how much a price of kenke is supposed to be sold in the major, business centers across the country and all of that. That is centrally planned. Government controlling prices, absolutely. And at that time, businesses or private sector had little or no control or say or participation in determining prices. Then under the regime of President Kufuor, he pursued what is called free market economy. He said, let's change the way we do the budgeting, allow the private sector to determine, in this case, the forces of demand and supply. Should be the game changer to determine the prices. So at that time, the private sector also had a say and all of that. But gradually realized that, then you saw that consumer, Honorable Mr. Kofi Kapito and co started consumer advocacy and all of that. You understand? Now we have gotten to a stage where we are in a mixed market economy. And I can give you an example. Look at the petroleum sector. We have NPA, right?
Yeah.
Government is regulating price control. That is how come when the dollar and the other major currencies were falling short against the cedi, we saw marginal decrease in the distance. Public Utility Regulatory, PURC, they are also in charge of that. If you go to the medical field, I think National Health Insurance has another mandate to regulate the prices of other essential medical kind of items like key medicines and medical tools and all of that. Why can't we do that for other sectors?
Is it very realistic to be able to do that?
It is. As I speak to you, Bank of Ghana has a unit that is in charge of that. But like I said, institutional failure. You see, the trade union, the Association of Ghana Industries and all of that, they are supposed to be managed and controlled by the Bank of Ghana. I've forgotten the unit. There is a unit in Bank of Ghana that is supposed to ensure that whenever there is a positive gain and consumers are supposed to benefit, they regulate the system to ensure that, consumers get the right benefit. But if we leave the market loose like that, there is what is called collusion. You understand? Importers, the wholesalers, retailers, and all other business, entities will collude to have what is called a hyper profit agenda, and that is unethical in the business circles. So when that happens, what you see is that government is doing everything possible. You see on paper, and even in the forex, that the cedi is doing well, but it doesn't reflect in the pocket of the people.
I am tempted to stay on that for a few minutes before we come back to our conversation for today. What are the effects? I know that price control has certain effects on people. What are the effects of that? And while you answer that, okay, I have another question, but just you may want to attempt that. What are the effects of price control?
Okay, so price
I know
control.
there are negative and positive effects. You may want to.
Yes, so the negatives come when one of the negatives, I just said, when the institution in charge of the price control, I don't want to use the word price control.
Okay.
It sounds too forceful and like it's more or less like militancy.
I understand.
But I want to use regulation. When the institution in charge of the price regulation fails to do its job, the negative effect is that consumers don't see the full benefit of the economic downturn or the economic gains that the government is making. And if the regulatory institution also, flex its muscle so hard, it also affects businesses.
Okay.
So when we say price regulation, the reason I said I don't want to use the control. When price regulation is a system where there is more or less like a meeting or a meeting point where the businesses will not lose, they get ethical profit, and then the consumer is also not placed at a disadvantaged position, and they get whatever benefit they also ought to get. For example, if the exchange rate is going high, in this case the cedi is performing poorly, like we saw in some previous years, what it means is that the cost of importation is very high. And so it is fair for the businesses who are imported, because majority of the things we consume in this country are imported. Let's face the fact.
Right.
So it is fair for the importers also to at least pass a margin of the extra that they are incurring to bring the goods into the country. It is fair for that. So the regulatory system or the regulatory institution can come in to help these importers to set a margin that will cushion them to recover their capital and get some reasonable profit, whilst the consumer is also encouraged or made to pay a bit more in a fair manner to be able to get the good that they want. But if you make it loose, there's collusion amongst the importers and other business entities to set prices in order to get unethical profit. If you make it too restrictive, you collapse businesses, because in this case you are forcing businesses to set unrealistic prices that will actually disadvantage them, even erode their capitals, and then they go bankrupt or they shut down. So regulation is a win-win kind of thing. If it is well done, businesses benefit, consumers benefit. But remember, you see, all of us are consumers before we even become businesses. If you have to remember that. Yes, the person selling, let's say, bags of rice in Medina Market has forgotten that he has electricity bills to pay, or he will go and buy maybe a mosquito coil or a bread somewhere. We are all consumers. So the regulatory institutions ought to do that kind of regulation to ensure that there is a win-win or a fair level, a fair playing ground for both businesses and consumers.
I see. But how do you deal with the fact, when businesses tell you that I restocked my stuff a while ago and I haven't gone to restock, and so the new changes in the macroeconomic, in the economy really hasn't affected my business positively in any way yet. So how do I reduce my prices if we're doing price control? How do you handle that?
It's a fair argument, but they abuse it. That is why whenever the regulatory institutions are working fairly, they can set a date with which the new price regime will take effect, making room for old stock that were imported based on the old kind of economic condition to actually get cleared before the new ones that are going to benefit from the new economic condition setting for the price regime to take effect. You understand?
Yeah.
So it all borders on regulation. You understand? When the regulatory institutions are working well, they understand that, of course, yesterday when you were importing, you imported it at a particular price regime or at a particular cost. Now there is a new economic condition that is warranting or causing, demanding that you are supposed to, reduce your prices. The regulatory institution is so reasonable that they cannot force businesses to, add old stock that were actually imported at a higher cost and then reduce the price just because there is a new economic condition that is showing that there should be a decrease. So normally the regulatory, if you go to the US, UK, and even the UK, where it is purely capitalist economy, you understand? Yeah. There is it is still, classified. If you look at the nature, it is still a mixed market economy. Government comes in to regulate to ensure that there is a fair deal where businesses are not going to lose. So anything like the example you cited that will make businesses lose out, they are protected. Because remember, they are also, apart from the fact that you don't want them to make unethical profit, they are creating jobs. They are creating employment in the system. So if the regulatory institution does something that will actually cause a negative effect on their businesses and they shut down, they will tell laying people off, and that creates unemployment. Is that not the case? Yeah. The same way, if they put the consumer at a disadvantage, all their incomes are eroded such that they cannot even save, for banks also to get money to loan out to the same business people. There is a cycle. Economic relationships are cyclical. You understand? You are a consumer, I'm a business person. I'm a consumer somewhere. Somebody's also a business person. And it goes around like that. So it's all about a very decent, robust, effective regulatory mechanism in the system to ensure that there is a win-win. That's why I use the term a middle playing field.
Right. Okay. Well, maybe one day we'll have a conversation on that.
Yes.
Yeah, hopefully, because it's a very interesting conversation. I know it's come up a lot of times in the past.
Yeah.
Yeah, but in recent times, I don't think we've paid so much attention to it. Maybe we have a conversation someday, and then we can make some progress on that. But if you just tune in, this is Business Breakfast on Z101.9 FM with me, Nitrebi Hammond. And this morning, I'm talking to Dr. Felix Larry Esilfi. He is an economist and he's executive director of IDER, and he's joined me this morning to have a conversation on whether the falling lending rates will actually impact or maybe ease pressure on Ghanaian businesses. And that's what we're discussing this morning. You can join the conversation. I would love to hear from you. The number to text is 0544321019, 0544321019. You can send me a WhatsApp and I'll read your messages for you. You can as well call me on 030-3956641, 030-3956641. We're streaming live on Facebook at ZFMGH and also on YouTube at Z Multimedia. Please visit these platforms, drop a comment, and I'll read them for you. All right, Doc, let's continue the conversation.
Yes.
Now, we are seeing, of course, we know that once the lending rates are falling, it should be able to translate to, once the policy rates drops, it should be able to translate to lending rates. Why aren't we seeing that? The lending rate still remains quite high. Why does it take a long time? And you said you agree with Professor Assuming on same.
Yeah.
Why does it take quite long to be able to see the benefits in there?
Yes, so every bank or every financial institution has a research unit.
Okay.
So the fact that one economic indicator is showing positive doesn't mean that automatically it's gonna, show up on the other side. Some sort of research ought to be conducted. Comprehensive data activity ought to go on, and then a determination is made, because even if the lending rate will respond positively in terms of also going down for businesses to get easy access to capital, at what margin should it reduce? All these things ought to be done by the financial institutions through their research unit to be able to determine that.
Right.
And like I earlier said, the cost of doing business in this country is not only controlled by the monetary policy rate.
Okay.
Even the banks, their cost of doing business goes beyond that. So in this case, the lending rate, the determination of the lending rate by the commercial banks goes beyond that. They do what is called risk analysis, credit rating of even businesses and all of that within the economy. And then the past economic records of the economy itself.
Right.
Sometimes maybe positive gains do not last for that long time. So you need to be very careful as a financial institution to determine a rate such that if the gains you are seeing now, tomorrow you wake up and it is the reverse, you don't actually, shortchange and all of that. So sometimes it is even rational for businesses or for the commercial banks to, for example, if the monetary policy rate has gone down as at last week, you don't expect that this week they have to reduce. They have to maybe steady the financial market a little bit for maybe a week or two to be able to get to a point where they know that the risk of lending to businesses and individuals is quite also lower and all of that. You understand? Before they can determine that. So it's not, and that is why I share I stand with Prof in this regard. There are so many latent, if I say latent, hidden, variables that we don't see, when it comes to some of these, in terms of financial economics, there are so many latent variables and then observed variables. Sometimes we people, those of us sitting behind, we only consider the observed variables, things that are evidential. You can say, oh, if this has happened, then this ought to happen. But that is not the case. There are latent, issues that ought to be addressed. And, to quantify risk is not an easy job. You understand? There are so many robust analysis that you are supposed to do, before either you are using structural equation modeling to determine other factors, latent and non-latent factors here and there. The global economic kind of thing. If I say global, I don't mean the world, but I'm talking about the overall economy, economic setting of the country, and all of that. Government-owned behavior. Will government make a projection or a promise and then renege on the promise and all of that? All these things ought to be considered. Before a determination is made. So it's not that a straight line equation or a linear equation as people think. Things are highly geometric or exponential, and so it's not straightforward like that.
Now, bank executives oftentimes would would make reference to issues like non-performing loans and all of that. Is that a real bottleneck, or there's more to that story?
Yeah, so one of the variables is non-performing loans. You understand? The higher the non-performing loans, the more unattractive it is for the commercial banks to actually lend. Because non-performing loans, in layman's terms, is, the fact that the rate at which people fail to redeem themselves when they are owing, or when they take credit from the commercial banks. And so when these things are there, even that non-performing loans, to manage it is very expensive. You need to, invest a lot of resources to try and see if those loans can be recovered. If not all, at least can part of it be recovered. So when the banks sit down and they look at how much they invest in, non-performing loans, and then compare it to just yesterday reduction in monetary policy rate, and we all expect that they have to reduce their loans, it's also not fair. So it goes beyond that. Remember, banks also pay taxes. They have to make profit. They are not profit. They are not Father Christmas. And so, at what profit margin that is fair for us to ensure that we are not pressing our borrowers, say so much that they cannot, service their debt or the loans that they've taken from us. All these things, all these calculations ought to go, in before a determination can be made that, okay, we are reducing. There has been, I have forgotten some of the years, but there has been occasions where government has reduced the monetary policy rate, and the banks, the commercial banks, did not reduce their lending rate because of non-performance.
Was it before they introduced the Ghana reference rate?
Yes. Before they introduced the Ghana reference, the reference rate more or less like publicly
regulating it.
Yes.
Okay.
And that one is more or less determined by the forces of demand and supply in the market.
Right.
So that is before that was introduced. There were occasions where the monetary policy rate actually came down, and the commercial banks did not reduce their rate because of the prevailing economic conditions at that time. And one will ask, why didn't the Bank of Ghana impress on them? The Bank of Ghana serve as so one of the regulatory body in terms of the financial sector is the Bank of Ghana. So at that time they felt like, well, it is fair for them to maintain it.
Right.
But for government side, we can reduce it to ease the banks of something, because maybe at that time, before the reduction of the monetary policy rate at that time, the commercial banks or the financial market was being squeezed. So now that they have reduced the monetary policy rate, it is fair for them to be able to recover whatever they lost and all of that. So it's not. That is why, even the last time I came here, this credit rating and what have you, we are quick in jubilating at things. We need to wait for it to give it some time. Maximum, some of them will take even months before it can show up.
Right.
Others can take weeks. I'm not saying that the lending rate, the banks should take months before they reduce, but it goes beyond what we see. There are so many or so much latent issues that ought to be considered before we can actually see some of these things, happening.
Right. Okay, let's talk about the sectorial impact. Essentially, the impact on sectors like manufacturing and agriculture often rely heavily on the credit for their operations. That even construction, they all depend on that. Which industries will likely feel the benefits of falling lending rates first?
Yes, so this morning you are an economist. You have already mentioned them, the manufacturing sector. And so, they are capital intensive. The machinery, bringing the machines, if they are a startup, the machines that they are supposed to get, the structures that they are supposed to raise, So we have something called the capital expenditure,
Yeah.
and then we have the working capital that they also require, and operational expenses and all of that. So all these things, when they are startups, they need business, they need some sort of loan to do that, and then they need these loans to be at a very affordable rate in terms of the interest rate, to be able to actually secure or procure them and use them for their businesses. The existing ones will also need capital for loans to expand,
Right.
extra capital injection to expand, and that can maybe obtain only through loan. So they stand to benefit. You see, the service sector, services are intangible. The only way you see services are quality is about the feeling you are getting. You understand? But in manufacturing, you are dealing with tangible products. They are not services. You understand? And so sometimes the technology that you even need, let's say you are an existing manufacturing firm, and then maybe the machines that you were using, there are new ones that will make you more efficient and more productive. That technology or the means of production or the means of manufacturing, maybe there is a new way of doing it, and that would, before you can adopt the new way, you need some sort of money or funds to be able to back it. You understand? So they stand to actually benefit a lot when it comes to a lower lending rate. I'm not saying the service sector doesn't enjoy. If you go to the hospitality industry, some of them also want to embark on some capital expenditure by expanding and in terms of their facilities and all of that. Yes, they also benefit. But the key, and that is why you see economists like Prof and other young ones like myself, we always advocate that the cost of borrowing in the country is so high. We say this not because our target is the service sector. It's because of the manufacturing, the industrialization. Because see, the structure of the Gojusberg economy we have been operating, we all accept that it's not helping us.
True.
You understand? But we are also not able to embark on full-scale manufacturing or industrialization because the cost of borrowing or the cost of capital is very, very heavy in such a sector.
Right.
And so if the lending rate is so high, you can't do that. You understand? So that is why we always advocate that or complain that the cost of borrowing in the country is so high. Our aim is that when the cost of borrowing or the lending rate is so low or is very, very affordable, it affords people to be able to embark in industrialization, manufacturing, value addition. That is why even in cocoa sector, we are exporting raw cocoa. The gold sector, we are exporting raw gold.
Yeah.
We can have, if the cost of borrowing is so affordable, you can have private businessmen who can even have a joint venture, secure loan, set up a refinery, private one, like other countries are doing. You see, to be able to, and when they do that, they are able to employ, create jobs, and look at the supply chain, the value chain. Several direct and indirect jobs are along the chain. But if the cost of borrowing or the lending rate is so high, it deters people to embark on such an such an investment. And so as a result of that, you will see only tabletop kind of businesses, roadside businesses, and they'll go to the microfinance institutions and even take very expensive loans. Because the microfinances, because they are not well established, they have to do everything possible to protect their money. And because the processes of procuring such loans are also not difficult, they tend to set, unrealistic, interest rate. And because these small businesses want them, they go for them. And the commercial banks are there having a high level of, non-performing loans to service and all to spend on and all of that. And businesses are not able to approach the commercial banks and all of that. So the lending rate, when it goes down, the key beneficiaries are people in the agro-industrial sector and non-agro-industrial sector like mining, oil and gas, and then all other sectors that we can consider.
I see. One major issue has got to do with the SMEs and startups.
Yes.
According to research, I think about 15%, only 15% are able to access credits from banks and all of that, meaning that they do their business without loans. Is a small drop in the lending rates going to change the dynamic, or you think there are deeper reforms?
There should be deeper reforms because you see, as I speak to you, and I stand to be corrected, the conditions that are there for businesses to be able to procure loans or borrow from the commercial banks. It's the same for, bigger, large scale businesses, and then the small scale businesses.
Yeah.
So your guess is as good as mine. If, as I sit here, okay, the level that businessmen like the chairman of this particular media house, I'm not at his level. You understand? So if the two of us are going to compete for loan, if you are a bank manager or a credit manager of a reputable commercial bank, the two of us, whom will you consider as less riskier to lend to? He's the one.
Right.
You understand?
Yeah.
Maybe he is already having a bigger manufacturing conglomerate. I am now a startup. But the conditions and the conditions or the things that are required for all of us to qualify to get loans from these commercial banks are the same for himself and myself. So you see that all the time, the SMEs struggle. So there are deeper reforms, So government ought to deliberately assist the commercial banks to design, special packages for them to be able to access in order to, kickstart and expand and grow to become the bigger ones that we all know of. Otherwise, this reduction we call it non-targeted. It's a non-targeted kind of reduction. It goes for all. Right. And rather the people who benefit are the larger conglomerates, larger manufacturing or businesses, larger manufacturing firms or other businesses. Yeah.
So you're calling for deeper reforms, and specifically you're saying that they should have some packages for startups.
Exactly. So
that's a very good call.
Exactly. So let me quickly add here. You see,
okay.
What I'm saying is more or less the form of the current administration's idea during the electioneering campaign that they will set up a women's bank.
Yeah.
You understand?
Yeah.
What was the rationale? In their minds, they felt like women competing men for loans or capital to be able to start up their own businesses and even expand, they are always at a disadvantage point. You understand?
Yeah.
Because by culture and by nature, men automatically control the larger resources. Go to the villages, even for agricultural production, access to land tenure system. I'm currently doing a study for an international development organization, land tenure system. Some of the findings so far, the analysis we are seeing is that, about 70 to 80% of the lands for agricultural production in the hinterlands are in the hands of the men. You understand? So that is how come in the minds or at the back of the minds of the current administration, when they were campaigning, they felt like there should be a special bank with special services for women. The same idea ought to be extended to the entire private sector, be it owned by women or men, but targeting at what? The small scale industrial sector, such that they can have like the same thing as the women's bank.
But are in the microfinances dealing with that already?
The microfinance, as I told you, if you recall my previous submission before this question came in, I was saying that because they have soft procedures, for giving out loans, most of the time their interest rates are even higher because they are bold to take higher risk.
Okay.
I can walk in and I say that I need a loan to go and do business. Sometimes as the things that the commercial bank would demand, maybe some document of a property as a collateral, whatever, they can actually ignore all of that. The best thing they can do, okay, let's go and see your business, let's go and have a look at your office. You understand? They just come and do inspection, and then they just get your house address. That's all. And then they give you the loan. Yeah. So as a result, so you look at the risk associated with that. To be fair to them, so they peg their lending rate at a very high level. You understand? Yeah. So the lower the procedure or the easier the procedure for procuring the loan, the higher the interest rate. Right. So they are not serving that purpose. Actually, the origin, if you look at the Microfinance Act of the Bank of Ghana, the main purpose of the microfinance is to actually give easy loans to help the small SMEs to actually expand and grow. Yeah. But we are not meeting the purpose. Why? Because first of all, the microfinance don't even have enough to give. For example, unless I need 100,000, a microfinance I approach say, oh, Doc, we can only give you 50,000. Where do I get the remaining 50,000? Right. You understand? So I can take the 50,000 because I'm not having the remaining 50,000. I end up using the money for the wrong thing.
Okay.
You understand? It's just like you have gone to borrow money to maybe do something, and then instead of you to get the full money, you got half of it. So you are keeping it so that you look for the remaining. By the time you get the remaining, maybe some other demands come and then you spend the money on that.
Right.
But if they are able to go to a bank specially designed for them to give them special packages, you understand, for which they can easily get whatever amount they need to be able to expand or even start up, then they can do whatever they are doing. Otherwise, I don't think the microfinance institutions are really serving their purpose, and I don't blame them for that.
All right. Okay, Doc, we have to go now. Our time is up, and so we'll go. But the Bank of Ghana has actually set an ambitious, a very bold plan that by 2029 or so, they're going to reduce the MPC to about 10% or so. I don't know if you know about it.
Yes, I've heard about.
You've heard about that. Yes, I want to know what I mean from a policy standpoint, what needs to happen there.
They say how many years time?
So from now to 2029, so 4 years.
2029, so that's 4 years.
Yeah,
it's possible. You see, in this country, my brother, I will not, argue any government that will set such a target. First of all, we need to encourage government to set targets. It's a key thing.
All right.
So it is a right call, rather than we allowing them to work in a vacuum. Now, by 2029, if by the grace of God we are all alive and kicking, we can refer them and actually argue or commend them for being able to, for them achieving that. If they are not able to achieve, we can criticize them, and they will come out and tell us the reasons for which they could not. Even if they are able to improve the system or the situation, but they are not able to meet the target, at least there was a benchmark. We can encourage them to meet the gap. You understand? So that is a key thing. But let me quickly hasten to add that, look, that target for me is even a bit loose. They could have gone a bit higher, because you see, there are so many routes. If you have observed my line of argument, anytime you and I have conversations, I speak about institutional failure and the weaknesses of the Ghanaian business system, financial system, policy system. You understand? Corruption is one of them. And you understand that. And the corruption, I'm not speaking about only government aspect of government, but even private sector, we the individuals, and then businesses, the corruption or the corrupt act that we engage in. We want to profiteer, the act of profiteering, by beating the system to prove that we are smarter businessmen. Being a smart businessman doesn't mean that you have to steal or you have to cheat the system. A smarter business person is the one who, by following the rules and regulations of the game, is able to manage the limited resources at its disposal to make the optimal benefit out of it. It means you are being efficient. It means you are being a smart business entity.
Right.
But if you cheat the system and profiteer yourself and make huge profit, it doesn't make you smart. Excuse my language. It makes you stupid and foolish. Because at the end of the day, somebody is also doing same in another sector. Right. You will go and demand services. So at the end of the day, we create chaos in the system and we all suffer. So that target is realistic. If they are able to manage the institutions very well, clean the system, ensure that people are doing fair businesses, individuals like you and myself are also doing the right thing within the economic system, these things are easier to actually achieve. And then they can also achieve that through adoption of technology. This time AI has come. So that's why I said it's also realistic with AI. AI, artificial intelligence, it doesn't have a feeling to change its mind. Once you program and command it, it's going to give you exactly what you want. So we need to actually even train our public sector, staff to be able to actually embrace AI. It's very, very key. Right. And then rather than this manual, because the manual creates a lot of loopholes and chances for people to actually, enrich themselves and leave the system, in negative kind of situation.
Right. Okay. So, looking ahead, where do you see our lending rates by the end of 2025? I don't know if you have any projections.
I know that I don't have data. I normally make projections with real data,
right.
but I can make some sort of qualitative projection.
Okay.
I know that definitely it will go down.
Okay.
If the Bank of Ghana go the way we are going, whatever, I keep encouraging the government, whatever they are doing right, they should deepen it and even look for more innovative ways to strengthen and expand the good things that they are doing. The problem I have with this government is that they have weak communication system. You understand? They are not able to, their communicators are communicating as if they are in opposition. At this stage, you don't allow the opposition to set the argument or set the pace for the argument. You are supposed to drive the thing. And that is one thing I commend the previous administration. You see, the free SHS, those days, even we are hungry, free SHS. We can't pay our bills, free SHS. They drummed it to the level that even my mother at the village, once upon a time, I intentionally engaged in a debate. Those days that you were going to school and I did not, if Akufo-Addo, you would have gone to school for free and I would be happy. Look at the communication. But now, look at the good things that have been launched. The stress-free, whatever is there. The free sanitary pad, whatever is there. Feed Ghana project, the 24-hour economy. Are you hearing anything? They are not communicating. Rather, when they go to studios, it is what the MPP is saying that they spend their energy to debate on. Instead of them to debate or discuss policies for the MPP to chase and counter the argument and even try to rubbish it, then that will give them the opportunity to open the whole thing up and break the policies down for the laymen by the roadside on the street to understand. They are not doing that. So I will encourage them, they should look at that aspect. And then also whatever, as I said, whatever they are doing, I love the intercourse between the finance ministry and the Bank of Ghana. That is the way it ought to go. It shouldn't be a situation whereby there are separate or divergent policy agenda for the two institutions. Now you can see that from day one that they came, they have been working together. The fiscal policy dimension is working in synchronism with the monetary policy aspect sector of the economy, and that is how it ought to go. When there's two sectors, or when these two sectors speak to each other, we are able to get the benefit, and that's what we are seeing.
Right.
So I encourage them to continue doing that.
All right. So, so for business leaders who are listening to us today, what key indicators should they watch in the coming months before making some borrowing or investment decisions?
Yes. So first of all, they should look at the risky nature of doing business.
Okay.
I will encourage them that they have to diversify. Diversification is the order of the day. If you have, say, 50,000 to invest, don't push all the 50,000 into one sector.
Right.
Okay. You need to at least have about, let's say, 30% in another side business. It's very, very key. Especially the startups. I have been a startup before, and I have failed before. I started a pure water company. At that time, the zeal was there. I invested about 500,000 into the system, and then I didn't know that the boys who work in that area are they are more intelligent than me. I claim that I'm a PhD holder, but they are PhD holders down there. You understand? And they shortchanged me, and along the line, I had to sell the machines and everything, and then shut everything down. And assuming I did not have a side business, then my whole life would have been cramped. So true. Diversification is key. Even the existing businesses, I have seen some of them doing a couple of that. I encourage the rest who are not doing so to do that. It's very, very key.
Very important.
And then they should also, take advantage of the prevailing economic conditions and make better business plan, strategic plan, maybe 5 years, 3 years, whatever plan, and pursue it rigorously. And then, please, I also encourage them that the act of profiteering is not the best way to go. They should play fair in everything that we do.
Right.
And then, when the system is fair and right for all of us, it's a cyclical kind of feeling. You do, I do. You do me, I do you. So if you do me good, I do you good. If you do me bad, I do you bad. So then the whole thing is a zero-sum game.
Right.
But when we are able to play fair, it's a win-win kind of level, as a playing field for all of us to enjoy as beneficiary of this economy.
Right. Doc, thank you very much. It's a pleasure talking to you.
Thank you.
Thanks for all.
Thank you for having me
all the time. Really grateful.
Always a pleasure to be here. Thank you.
Okay. What a rich and insightful conversation this has been.
101.9 FM. Your life.
And today we've unpacked more than just lending rates. Myself and Dr. Felix Larry Esilfi. He's an economist and also the executive director of IDER. All right, that's how we wrap up today. Whether you're a CEO steering a multinational or a young entrepreneur dreaming big or a professional making strategic investment decision, one thing is clear. The interest rates are not just numbers. They are signals guiding where capital flows and how businesses thrive. And as we leave today, remember the words of Warren Buffett. It says that opportunities come infrequently. When it rains gold, put out the bucket, not a thimble. Of course, falling lending rates could be the beginning of a golden shower for those ready to act. And the question is, will you be prepared when the opportunities knock? All right, thank you very much. My name is Nicho Ebi Hammond. We'll be back again tomorrow for more interesting conversations. Please take very good care of yourself. And I hope that this conversation will spur you on to make the right investment and borrowing decisions in these times. All right, I'll see you tomorrow. And when you think Ghana, please think Z. Bye-bye.